our next guest isn't going to help that mood very much.
Nope.
He says that the economy may appear to picking up steam. There's some big warning signs in housing and the labor sectors that many are missing out on. James Frischling, New York Capital president, joins us now. You're always so bullish, Jim, and you're saying that housing in particular, you're really worried about it for 2014. What's going on?
Yeah, and just giving people a heads up, the importance of housing to the economy, I think, can't be understated. It was one of the bright spots of our coming out of the recession. But a lot of easy money, if I could call it that, has been made. I think a lot of the refinancings have been done. A lot of cash buyers have taken advantage of
all the institutional money.
And the institutional money.
Is what you're saying. That's where all the money came in for 2013.
Correct.
So it wasn't really Americans buying homes.
And that's kind of the disconnect. I think as we come into 2014, we're seeing mortgage-backed security issuance down over 50% year over year. We're also seeing just a lack of first-time buyers, in part because of affordability. Prices up, new mortgage borrowers disenfranchised because of the expenses of housing, plus the inability to get loans right now from the banks.
So this is Cheryl's expertise with real estate, but I got to ask this question. Won't prices then come down as people aren't buying, and won't that open up the door for first-time buyers?
And that's where maybe there's a little disconnect, where you have a number of private equity firms who are buying up, really becoming some of the largest homeowners or landlords throughout the country, doing an REO to rent strategy. So there is housing available, but the ability for these folks to buy the homes is challenged.
The job story, though, Jim, is something else you're talking about here, about, anemic job creation, low wages, consumers are loaded up with debt right now, and then to Adam's point, those first-time buyers not coming in. So it's more of a jobs and real estate story. It's not just about
that's
nobody buying.
Absolutely correct. And I think a lot of people are blaming the mortgage market right now on the spike in rates. I think it's less about the rates
and more tiny.
Right, and it's more about the jobs. The job growth has been anemic, as you just said, part-time, lower wages, and you have a whole generation of people coming out of school right now with massive debt in terms of student loans, and are therefore not qualifying for for a mortgage right now. So you have a group that's basically shut out from the mortgage market, forced into rent. So rental price is going to go up, yes, and again, affordability issues are going to be a challenge for this group.
We're watching the Dow come down. It's down 45 points right now. A lot of people blaming China because of poor economic growth there. But here in the United States, you still see some possibilities for people who might have some cash who want to invest in stock. And you actually think that Darden Restaurants is one of them. I thought they were saddled with problems with Red Lobster.
I do think the weather and having to dump Red Lobster, for lack of a better way of putting it, has saddled Darden. But there's an interesting activist investor group that's pushing them to help extract greater value. And I think there's a scenario where this company could be split up into the mass market appeal versus their specialty brands. And I do think there's value, and also in their real estate holdings.
We're looking at an intraday at Darden, but we should point out here that the stock is actually down year to date about 6%, based on the pressure that Adam's talking about. So do you think that Darden is a turnaround story by the end of the year? I mean, what's your time frame for this one? Because it's tough. You always say to buy a stock when it's cheap, but
And we are talking about this year. We think the restaurant trends are very positive. You have more than 50% of meals are people eating outside, and also people are looking for discounts. They're looking for promotions, and actually they're eating more with their family. So we do like kind of the fast casual, which we put Darden in, and I also mentioned a Panera, which we also think.
Why Panera?
We're betting on the jockey here. They had a hit in terms of customer satisfaction, because they were so popular, people couldn't get in and out of the store fast enough. So they've invested in new kitchen supplies, technology, training labor, and we really like they're trying to put great food and good service, and they're fixing what was, I guess, where the hit was. So we think they're going to come out on the strong side of this one.
No, that's interesting. Panera Bread, by the way, up 14% over the last year. We're looking at a chart of that one. Overall, there's some big economic reports this week that you've got your eyes on really quick. We're going to be getting GDP, jobless claims that you're going to be watching, and then also we're going to get a lot more housing data. What's the biggest report on the docket for you this week?
I mean, we narrowed it to three. Lots of housing data, as you know, tomorrow and Thursday. GDP would like to see it come in line with, because a lot of our enthusiasm is for this growth story to continue. And then consumer confidence end of the week. We think it's going to be up on back of coming out of a very tough winter. And again, that strong GDP number hopefully will feed through to the consumer.
Will balance off what you're expecting to see out of pending home sales. Okay, Jim Frischling, thank you so much.
Thank you,
Jim.
See you.